What's up, YouTube? Welcome back to Not Dumb Money. In today's video, I'll run you through a very basic discounted cash flow model, or a DCF. I asked you on Instagram whether you wanted to see a DCF valuation for Nvidia or Facebook. You guys voted for Nvidia, and your wish is my command. And Nvidia announced their latest earnings recently, so the timing is perfect. We'll build a DCF model for Nvidia that we will use to arrive at a target price for their stock. But first, if you're not a subscriber, please subscribe. Just do it, come on. Your support means everything, and it would really help out this channel. If you're already a subscriber, I love you. All right then. A DCF is a valuation method that uses a company's expected future cash flows to estimate its value today. It's just one valuation method, and I think it should be one part of your analysis and not the only part. And what I'm going to show you today is a very simple and basic DCF model. And believe me, DCF models can get a lot more complex. With that said, let's get into it. So I use Microsoft Excel, but you can use any spreadsheet application you're comfortable with. The first thing we need to do is get your base year numbers. For the base year, I always like to use a company's trailing 12 months. The key figures we need are revenue, revenue growth rate, operating margin, capital expenditure, tax rate, cash and cash equivalents, debt, number of shares outstanding, and finally, their cost of capital. For Nvidia, we're looking at a revenue of $14.8 billion. Their revenue grew at an average rate of 18.5% over the past 5 years. The growth rate between their last fiscal year and the trailing 12 months is 35.3%. Their current operating margin is 27%. Capital expenditure over the past 12 months is $990 million. It ranged between $500 million and $600 million over the past 3 years. Their effective tax rate is currently 3%. It ranged between 4% and 6% over the past 3 years. Their cash and cash equivalents is $10.9 billion, and they have $2 billion in debt. And their total number of shares outstanding is 618 million. Finally, Nvidia's cost of capital is 9.7% according to GuruFocus.com. The NYU Stern School of Business has an average cost of capital of 7.99% for the semiconductor industry. Okay, so we've gathered our base data. Now we need to start making some assumptions. With the DCF model, I always like to forecast 10 years ahead. I know it's impossible to forecast that far out with any level of certainty, but this is kind of how a DCF valuation works. I'm going to assume a revenue growth rate of 30% for the next 3 years, 20% for the 3 years after that, before it falls down gradually to a mature 2% growth in 10 years. For operating margin, I'm going to assume that Nvidia will be able to grow their margin over time to at least match Intel's operating margin today, which is 31.5%. Let's assume they'll gradually get there over the 10 years. I'm also going to assume a consistent tax rate of 6% throughout. So now we have our forecasted revenue, operating profits, and operating profits after tax. For capital expenditure, I'm going to assume that they increase that gradually from $900 million today to $2 billion in 10 years. So, we take our forecast for operating profit after tax, subtract capital expenditures forecast, and we get what's called free cash flow to the firm, or FCFF. We have these cash flow forecasts for the next 10 years, but we also need to calculate what is called a terminal value. What is Nvidia going to be worth in 10 years? We need to make assumptions on what Nvidia's cost of capital is going to be over the next 10 years. Let's assume it's 9.7% today, and that it will drop gradually to 5% in 10 years. To calculate terminal value, we use the Gordon growth formula. For us, we're going to take the final year's cash flow and divide that by the difference between Nvidia's expected cost of capital and its final revenue growth rate. Okay, we now have cash flow for 10 years, and we have what we think is Nvidia's value in 10 years. But what does this mean? And what is Nvidia's value today? Well, we need to take all of those future projections and discount them. After all, it's called a discounted cash flow model, so it makes sense, But to do this, we use our assumptions on Nvidia's cost of capital to come up with the cumulative discount factor for each year in our forecast. The formula for this is simple. Kind of. For the first year, it's 1 divided by 1 plus the cost capital. For each following year, it's 1 divided by 1 plus the cost of capital multiplied by the cumulative discount factor of the previous year. We then use this to calculate the present value of all of our cash flows and our terminal value. It's as simple as multiplying the cumulative discount factor for each year by the cash flow of that year. For the final year, we also multiply it by the terminal value. We then take all of these discounted numbers and sum them up. So, the total value of Nvidia, according to our calculations, is $406 billion. This is called enterprise value. Enterprise value is made up of equity, cash, and debt. To arrive at Nvidia's equity value, we need to subtract debt and add back cash. And when we do that, we get an equity value of $415 billion. This is what we think their market cap should be. So we take this number, divide it by the total number of shares outstanding, and we get a target share price of $671.74. We compare this with Nvidia's closing price on November 20th of $523.51, and we're looking at an upside of 28%. And that's with some assumptions that I think are a little conservative. So although Nvidia has a high PE ratio of 86, our model tells us that Nvidia might be undervalued. And hey, that's it, guys. I hope you found this useful, and if you got this far, thank you so much for watching. What are your thoughts on Nvidia? What do you think of their latest earnings? How did you set your price targets? Please let me know in the comments. And if you like this video, please do me a huge favor and hit that like button and subscribe. Your support means a lot, and it really helps this channel. As always, it's been a pleasure. Much love. Peace.